right, good afternoon. Good afternoon, everyone. Welcome to our game-changing discussion on the evolution of sports as an asset class. I'm thrilled and honored to be joined by a panel of visionaries who've taken sports from pure fandom to one of the most dynamic, resilient, and fast-growing asset classes in the world today. I'm joined by Ian Charles, co-managing partner and founder of Arctos Partners, Don Cornwell, co-founder and CEO of Dynasty Equity Partners, Larry Fitzgerald, co-founder, Trenches Capital, ex-NFL legend, goes without saying, Fung, co-founder and group president, One Championship. Sports investments are experiencing an unprecedented transformation. Record-breaking media rights deals and soaring valuations are attracting a wave of institutional capital. These guys know a thing or two about that. Gentlemen, thank you for being with us today. I'm excited to get into this. Ian, I'll start with you. How is the influx of institutional capital changing the landscape, the DNA of sports teams, leagues, and platforms?
Well, I think when you talk about sports and institutional capital, it's really important to segment out the sports ecosystem. Private equity firms, institutional investors have been investing in the sports ecosystem for over 20 years. But 95% of that capital has gone into things like ticketing, media rights, venue management, player representation, sports gambling, sports data. Only in the last 5 years has institutional capital been investing in the clubs and the leagues that own all of the brands and intellectual property that power this ecosystem. In North America, that limitation on capital started to change when Major League Baseball changed its constitution in April of 2019. And since then, each of the North American leagues has made a similar rule change, opening up to a very specific kind of institutional capital, funds that are curated and vetted by the leagues in a very particular way. It's very hard for most private equity firms to invest in the North American professional sports leagues. And because of that, you have a moat, but you also have a lack of institutionalization. So many of these businesses are family-owned businesses with lots of optimization and operational improvement potential. You just have to position yourself to be the right partner for the owners that are looking for that institutional capital, and position yourself to be the very best partner you can to those owners who want it.
Don, institutional capital, private equity in specific, has made it to the finish line, major North American leagues. What are your thoughts on that?
You're talking about the National Football League? Or?
Correct.
Yeah, so in case those that don't know, in August, the NFL provisionally approved a handful of firms, Ian's firm, my firm, and a few others, to invest in NFL franchises. The NFL has always been very methodical and thoughtful around their ownership rules, and I think it's been one of the harbingers of their success. And I think for all of us that are looking at it, when you look at sports, there are a few leagues that really pop to the top in terms of just number of eyeballs, in terms of their business model, in terms of profitability, and the NFL is one of them. So it's a great opportunity for all of us. To your question about what does growth look like and what does private equity mean for these teams, I think some owners view this as an opportunity for liquidity. They've got family planning, they have estate planning, and then there's other owners that see opportunity for growth, right? One of the things that I think has been missed in sports historically is you have an enormous number of eyeballs, an enormous amount of passion that comes with fandom. And teams are figuring out, and leagues are figuring out new ways to monetize that. And there's times when they need capital to effectuate their plan. And I think there's some owners that will use our capital to do that.
Sure. One of those platforms that is revolutionizing the game, Fung, is One Championship. How has the influx of institutional capital changed the landscape for martial arts, for One Championship in specific?
You know, the interesting thing is actually the world of martial arts has always had institutional capital. Sequoia, for instance, right? One of the world's most storied venture funds has been our investor for many, many years, and they invested multiple times. If you look at the UFC and their journey, right, they've had institutional capital as well. Silver Lake, right, was an investor back in the day. So interestingly, if you look at the UFC and ourselves, and I know we're talking about combat sport, but you can see some parallels in Formula One as well in their journey with CBC, right? Some of the younger leagues, the NFL, the NBA, they've been around for a long time, and they're largely American federated leagues, right? If you look at the younger properties in combat sport, UFC ourselves, we've actually had institutional capital for a long time. if you look at our cap table today, we have sovereign money, QIA, Temasek investors. We have venture funds like Sequoia, and we have private equity players as well, like Iconic and Guggenheim. And I think, look, for us, it's definitely been a huge benefit, right? With institutional capital comes a lot of, as alluded to, ideas, problem-solving suggestions, and governance, right? That they can bring to the world of sports. So we've been a huge beneficiary of institutional capital, actually.
A big part of that change in governance, Larry, as capital increasingly finds sports, we're seeing athletes invest or advise alongside asset managers, Zlatan at Redbird, LeBron at FSG. How valuable is that perspective that you bring from the field to the boardroom? You've made a successful transition as NFL legend, now in the boardroom. How does this change the dynamic between ownership and the players?
Well, I think you see it different in multiple leagues. The NFL is still not as collaborative as the NBA is. I mean, Mark Leary's here today, and in his ownership group, he has Alex Rodriguez, and Alex extensively understands over 21 years of playing as professional sport, as an athlete. He understands the dynamics between ownership and players. And to be quite frank, it's like church and state, right? The players have their opinions, ownership has their opinions, and I think the more collaborative the players in the league and the ownership is, the better for the game. You think about the salaries are really the differentiation between partnership and collaborative nature of the NBA. When the guys are making that much money, they have a sprained ankle, they don't want to play, they tell you they're not going to play, right? So you have to, as an owner, you have to be understanding of their plight and their issues. In the National Football League, it's not as collaborative. And I think when you have players that have experienced it, they've gone through the rigors of training camp and injuries of that nature, they can provide positive insight to be able to help ownership and players bridge those gaps.
Speaking of insight, I would like your insight on the holy grail of North American sports, the NFL, opening up to private equity. You're a legend of the game. You've dominated the league for over 17 years. What are your thoughts on this shift?
I think it's a great move. We talked about it a little bit earlier with Don. I think it gives, especially some of the family-owned businesses who are capital constrained, the ability to be able to have some free cash flow, gives them the ability to be able to do some of the innovative things that you see some of the ownership groups like the Jones family and the Crafts and the Wilfs, they're able to do large developments around their practice facilities and gaming sites. And I think that is only going to continue to help increase the ability for them to do that and give better experiences to the fans.
Well, Larry, we're fortunate enough to have not only one, but two investment firms up here on stage, provisionally approved by the league to buy minority stakes across league franchises. Ian, this is obviously big news for Arctos. You're set to be the first and only investment vehicle to own equity across the 5 major North American leagues. What does this mean for you? What does this mean for the NFL?
Well, it's a huge honor to be one of the firms approved by the National Football League. The vetting and the curation process took a very long time, and so to be one of those groups is an incredible honor for our firm that was purpose-built to do this and set out to invest across the leagues for institutional capital. If we hadn't gotten that approval, it would have been a huge disappointment for us. But now that we have that approval, we have the ability to provide institutional investors with diversification across leagues, which is very powerful. We're also able to help owners who want to buy teams in other leagues do that at scale because we already have the league approvals, the knowledge, the data that it takes to help them not only execute that very large M&A transaction, but then be an incredible operator right out of the gate. So for us, investing in the Big 5 North American leagues is about 80-85% of what we do. It is a very unique asset class or beta factor for investors to participate in, which I'm sure we'll talk about later. It's one of the only things I've seen in my career that is a return enhancer and a risk reducer in a diversified portfolio. And as a manager, if we can add alpha to that very attractive beta, there's a market need for that.
It's truly remarkable. Don, you've advised the league for a number of years. Now you're coming in as a partner, as an investor. How would you describe that shift, and what do you make of how the NFL opened up to private equity with a certain amount of restrictions, perhaps limitations, to protect the sanctity of the sport?
Yeah, Ian, I think, talked about it a little bit. It was a very long process, and the league, as they always do, spent a lot of time studying the good and the bad of what happened previously with other leagues. And they wanted to design a program that fit best for what they are. And as an advisor, I experienced that, where they would spend years and years and years thinking about, do we go to LA, right? Is it time to now put teams back in LA? And they never rushed because they never had to. Interestingly, we're seeing that now with international. The league has decided that it's time to push hard. They're playing obviously a lot of games in the UK, Germany, they played in Brazil. I think they will end up in this region at some point. And as an advisor, I saw that. Now the switch for me was fairly natural because of relationships, right? And we all know how important relationships are. I used to work for Roger, right? So I have known Roger for literally 30 years. And so when I showed up in a different seat as a principal, it was more comfortable, right? And it's sort of a testament to how important relationships are. I mean, I think we're all here gathered, right, at this event because we value relationships. And I think that was a key part of our firm being involved.
Fantastic. Well, Fung, one championship, not unlike the NFL, is going global. You've adopted a number of innovative digital-first strategies. What can other sports, perhaps legacy leagues, learn from your innovative approach at One Championship?
Yeah. Well, first of all, I would say that all the leagues, not just the younger ones like ourselves, are trying to figure out their digital strategy. Many of them actually have been really pushing the cutting edge on this, the NBA, the NFL. So the learning really is mutual. I don't think we're necessarily ahead of everybody else. What I will say, though, is because we're the youngest of all the global sports properties, having been born in 2011, we were born into the digital age. And when we were born, we did not have all these legacy sort of TV media rights deals that were locking us into these lucrative 5-10 years behind a paywall. So what that enabled us to do was to make a big bet on digital early. I think, and when I say bet on digital, I don't just mean selling rights to streaming platforms. I mean putting a whole bunch of content on social media. There is short form, there's medium form, there's long form. If you look at YouTube, for instance, a lot of medium form content. You look at TikTok, Douyin in China, Instagram, a lot of our short form content resides there. I think in this day and age, the key thing is you have to meet the fan where they're at, when they want the content, and on the device that they're holding. The good news is, because we're in combat sport, it's pretty easy to watch a fight on a small screen, right? And small screens, rightly or wrongly so, are the first window of consumption today for most fans, right? So watching a fight on a small screen is easy. It's a lot easier to watch a fight than watch golf or watch tennis, right, on a small screen. So I think that has helped us a lot. But the key thing here is making sure that you have the right type of content on the right type of medium. This extends into Web3 mediums as well. We're in the process now of developing a blockchain game with Animoca, one of the biggest Web3 companies in the world. We're going to launch that in a couple of months. And we're now going to add a Web3 layer on top of that with the Sui blockchain. So we can talk about this another time, but I'm just saying, you have to meet the fan where they are, and you have to interact with them in the way they want.
We'll get to the tech for sure. Larry, an equally exciting trend we're seeing across the player side. Players are turning themselves into global brands. NIL agreements are adding fuel to that fire. Young athletes now face a trade-off between performing on the field and building a global lucrative brand. What advice would you give those young athletes, and how can investors, more importantly, capitalize on NIL in a responsible way?
Yeah, well, I think the athlete has to really have a mind shift. I mean, they've called them student athletes for a long time. They're athletes that are students at the universities. These are some of the highest paid employees of the university now. And I think most important, like they have to really focus on education because, at 18 years old, decisions that you're making at 18 years old are not ones that you would make at 28 years old. And so being able to have financial literacy and be able to have items in place to be able to help them safeguard their capital they're earning, and also trying to maximize your visibility in your profile, you have to be authentic. I think that's another thing that's really important. Just not aligning with any brand because they're bringing you some capital. Understanding where it is that you want to do, who it is that you want to be, what do you want to represent, and aligning yourself with those brands.
For sure. Well, athletes aren't the only part of the sports value chain facing a trade-off or navigating a tightrope. Investors, asset managers also navigate an equally challenging set of trade-offs, building a global franchise while maintaining a local identity, winning on the field, generating alpha off the field, pleasing the fans, the community you're invested in without overspending. How, as a minority investor, Ian and Don, do you navigate these trade-offs?
So I'll talk a little bit about our investment in Liverpool, and that's a unique one because they've got a fan base that pays attention to literally everything. They look at the balance sheet. They know how many dollars are going out to buy players and how many dollars are going out to others, to shareholders. And so when our money came in, there was a celebration because the thought was they're going to go buy players. But in fact, what they did is they reinvested in the business, which was the right answer for us and right answer for the long-term success of the club, but it's not what the current fans wanted. And I think striking that balance is a real nuance. And I think kudos to Fenway Sports in the way in which they handled it, but I do think it's something that we all face because fans want their teams to spend because they want to win. That may generate losses. In North America, that's actually possible. And I think we definitely don't want our capital going out into the hands of a left-handed reliever. We want it to go into things that are high return. And so it's a real challenge, and it's a balance that we have to strike.
Sure. Ian, what are your thoughts?
So we think about this slightly differently because of our focus in North America. The leagues don't let you have influence. That was Don.
I'm sorry.
Wake y'all up? Cool.
The
Go ahead.
North American leagues don't let you have influence over the players. You're not allowed to be involved in that at all. And so, on the one hand, that helps us because they can't blame us for the rosters that are put on the field. But our team's heritage comes from evaluating lots of different kinds of decision making.
Yeah.
We're huge nerds. And at an investor conference, you can think of excess return like alpha. There are sources of alpha in running a sports team. For a certain quantum of player spend, you might be able to create more hope in your fan base. That's actually a mathematical quotient that we measure across leagues and across teams. And there are organizations that have skill in producing quantums of hope per dollar of spend. That is alpha.
Oh, yeah.
There is a separate team inside of the organization whose job is to take the unit of hope and turn it into revenue and monetize it.
Oh, yeah.
And there are some teams that are way better at that than others. These are always different teams within the organization. And if you can mathematically identify skill, repeatable skill in both of those areas, you have a franchise and an ownership group that can create the maximum amount of hope per dollar spend and convert that hope into revenue and convert that revenue into fan engagement, new real estate, a fan experience. It's just a flywheel effect. And so that's how we think about all of these things on an integrated basis.
Well, a big part of the sport is the hope and the emotional side. We can't deny that for sure. I think we're all sports fans at the start, and now whether you're an executive or a fan, I think you still hold the emotional side of the sport near and dear. Fung, the trade-off we heard Don and Ian talk about, particularly across building a global franchise while maintaining a local identity, you faced that trade-off in one championship with you're well broadcasted across 195 countries, but you still managed to maintain the values that bind the sport, the values that bind martial arts. How were you able to navigate this tightrope?
To be honest, I don't think these two things are mutually exclusive. If anything, people like to watch sports precisely because of the values. In my company, we always say values, heroes, stories. It's the values of martial arts, the values of the Olympics, for instance, the heroes that embody these values, right, and their stories. And look, the world of sports is full of these. If you look at the Olympics, simple example, Pakistan winning the gold medal, right, in Paris 2024. I was there, actually, in the stadium, watching Arshad Niraj Arshad Nadeem win the gold medal. He beat the favorite from India, and his story, is one of struggle, right? He comes from a very rural part of Pakistan. in a small village, and the village actually had to band together to financially support this guy. I think it was Pakistan's first gold medal in 3 decades or something. The values of grit, determination, the values of respect that India and Pakistan, who are fierce rivals, right, in multiple ways, had for each other. They hugged, they embraced, after the medal presentation ceremony. Think about another moment like Saudi Arabia beating Argentina, right, in the World Cup qualifiers. I was there too, watching the game with a group of Saudi, Qatari, and Iraqi friends. And everyone, banded together, the friendship, the respect that everyone had for each other, and obviously the Arab world rallied around that win. So these are human stories that embody certain value in athletic performance and competition that actually enables us to scale. These are universal. So it's completely aligned. It's not mutually exclusive.
For sure. I mean, speaking of the human, I think we often forget the athlete, the heart and soul of the game. In this equation, sports is engaging in a very rapid process of globalization, Larry, and commercialization, often happening at the expense of the athlete himself. We're seeing those concerns voiced, particularly in European football. Is this expansion, this globalization, diluting the athlete in the process? We're seeing the NBA in Abu Dhabi, the NFL in Europe. Is this happening at the expense of the on-field, on-pitch, on-ice performance?
No, I don't necessarily think so. You look at the games that are being played in Brazil earlier this year between the Chiefs and the Philadelphia Eagles and the Packers. I don't think anything was different. I played in the first international game in 2005 in Mexico City. The experience was unlike anything I've ever been there. 110,000 people in the stadium. The fandom was like nothing I've ever experienced. I was at the game Tom Brady played in Germany 2 years ago. I mean, 2 hours after the game was over, the fans were still in the stadium. They were just happy to be a part of the experience because they never had it before. And so I don't see any issues with the game continuing to expand. The NBA's done, I think, the best job because the game is global outside of soccer. But I think it's only going to continue to expand, and I hope it does, to bring fans more opportunities to watch these great games.
I hope so too. I find it interesting that those concerns have arisen from European football, an arena that does have a ways to go when it comes to data, commercialization, professionalization, at least 15, 20 years behind North American sports in terms of maturity. Now, North American sports do maintain a very favorable league architecture. I mean, it's also unlike Europe in that you don't have relegation, you don't have risk of disruption. So my question to you, Ian and Don, what drives your thesis when you do go for a PSG, an Atalanta, a Liverpool FC, versus just sticking to North American sports? What drives you to go global when you do go global? Ian, go ahead.
So like I said earlier, about 80% of what we do is in North America. When we go overseas, we tend to invest in global brands who want our help monetizing and building their commercial enterprise in North America, where we do have a right to win. So whether that's Paris Saint-Germain, helping that club continue to grow its brand in North America, its sponsorship in North America, whether it's Liverpool in partnership with Fenway Sports Group, where we own that as part of a portfolio, where we have the diversification across all of those franchises, the benefit of all the cash flow from all of those franchises collectively, and we can manage the risk through the diversification. Aston Martin Racing in Formula One, Atalanta. What we're looking for are businesses that are immune from relegation, that have a global fan base and global monetization potential, where we have an active role to add value. When we invest outside of North America, that tends to be where we focus our time.
Yeah, and I would just add to that. In North America, as you talked about, there's a league construct.
Yes.
There's collective bargaining agreements with the unions. That actually creates an infrastructure that's easy to analyze, right? The difference between NFL team 1, 2, and 3, there's differences, but they're all playing by the same rules. If I look at a team like Liverpool versus a very small club in Europe, they're vastly different businesses. And so one of the mistakes that I see people making is they think, oh, I'm going to invest in a European football club. That could mean one of 1,000 things, right? There are small clubs that will never ever make money and never win. When we look at it, we say, okay, Liverpool is a team, there's no relegation risk. They've got $800 million of revenue. They have a right to win. They've got a global brand. They've got great management. if we can find that globally, then we're excited. Also in a good economy. I think one of the things that people, they sort of forget, like it matters what country you're investing in, and we like the UK. And especially as American investors, it's easier for us to come in there. I think one of the issues that I'm seeing just throughout the sports investing ecosystem as it's become more popular is people are forgetting some of the just basic tenets of investing, right? And you have to look at these as businesses, not just, oh, it's a lottery ticket because I want the next Wrexham.
Yeah, no, for sure. Do you think there are lessons that North American sports can learn from European football leagues and vice versa? I mean, in Europe, you do have sort of a decentralized IP monetization. The league doesn't own the IP. Clubs can monetize in a decentralized fashion. What are some of the advantages that you see in European football that North American sports can learn from?
Yeah, I'll start, and I want to hear Ian's view because he's got much more experience around North America than we do. But I do think one of the things that I've watched with Liverpool is that they are able to market throughout the entire world. And as the world's got more complicated, I think the league offices in North America who have the job of marketing globally could use more help from their teams. And I think, you know, take the NFL, the NBA, there are certain teams that have the manpower and the resources to go out and market, but they're kind of held back. And I think as the world evolves, we may see some of those teams get a little bit more active as it relates to global marketing.
Sure. Ian, what are your thoughts?
I think European football benefits from a sport that truly is global. You don't need to speak French to watch a League One game. 70 to 80% of the global population doesn't speak English. And so trying to get a kid in Thailand to get excited about American football, the language barrier is actually significant. It's one of the ways that generative AI is going to expand the reach of sports through instantaneous, very clean translation of the telecast of the game to the global community is going to help all of the North American leagues expand their reach internationally. The one thing that I think Europe has that is only mirrored in the United States in college football is the community. That communal, tribal impact is enormous. I am a huge data junkie, and I love charts. And I saw one of the most impactful charts in my career last week. It's an XY chart. The X is time, and the Y is frequency. And it's a search of Google search terms. That's the frequency. And the search term that is at an all-time high today is, how do I meet other people and connect? That's really sad.
Yeah.
It's really sad.
Yeah.
But also last week, I saw survey data of like thousands of fans of North American sport. The single number one reason that they go to games is to feel connected to other people.
Oh, yeah.
It's a powerful thing. Bringing people together across politics, age, socioeconomic, the tailwinds of bringing these communities together passionately is something we're really excited to be a part of and own a piece of, whether that's in Europe, the United States, globally with mixed martial arts, whether you're an owner, a player, a former player, being a part of like the one thing that brings everybody together right now, that's pretty cool. That's something we're really proud of.
Well, it's something I'm very proud to see investors, the Arctoses of the world, Dynasties really empowering. I think it's a very, very powerful sentiment to have and to feel. Being in a stadium, being a part of a community. Now, tech has a very similar aggregating effect. Fung, tech has been a big part of your growth journey, from VR fan experiences to blockchain-based monetization. What are some of the key areas that you've leveraged within tech to drive growth and take one championship to the viewership you have today?
Yeah. So I think it all starts, from the first thing I said, which is you really want to meet the fan where they are and interact with them in the way they want to interact with you. Some people like watching entire games. Some people like watching highlights. Right? Some people don't want to watch a sport. They're actually more interested in watching day-to-day life of their favorite athletes, cooking, walking their dog, and stuff like that. So I think technology has enabled us to serve up what people want exactly. You talked a bit about our VR journey. You're right. We were actually one of the first sports leagues to do a VR deal with Meta. This was like 4 or 5 years ago. I think NFL or NBA was the other one. So literally, you can go into what used to be Oculus. Now I guess it's Meta Quest. You can go in there and watch a one championship fight and hang out with people from other countries. So I've tried this. I've gone in there. I remember the first time I tried this, there was a gentleman to my left from Italy and a lady to my right from Belarus. And we were talking about, I was like, yeah, this is my business, But that is what Ian talks about. It's a sense of community. And look, technology has brought the world closer together. And I think in sports, I talked a bit about the Saudi versus Argentina example. That's a great example, right? But the good thing is today, you don't have to be physically there with your friends. You can actually interact in the metaverse. And we have a whole bunch of projects that are coming up, in that space.
Sure, there's a lot to be said about the intersection of team performance and tech as well, Larry. A lot of teams lean on data, Moneyball style, to really improve performance on the field and drive returns off the field. What are some of the most exciting opportunities you've seen at the intersection of team performance and tech?
Well, not just team performance, but like individual performance in tech and fan interaction. Fans increasingly want to be more engaged in what's happening on the field. I mean, you think about just watching the U.S. Open this year, and Rory McIlroy standing over that 4-foot putt to be able to win, and he had his whoop on. And on TV, you can see his heart rate was beating at 120 beats per minute. And to think most of us will never ever stand over a putt for 4 feet to win a U.S. Open, but I can relate to what my heart beats at, when I'm on my Peloton bike riding. To think that's what he's feeling standing over that putt, it gives you a glimpse inside of what's happening in the athletes. And I think more things like that will continue to be available to athletes because, quite frankly, the in-home experience is damn near as good now as watching it in person. And you think about what Apple's doing and innovation that's happening with you being able to consume sports in a different way than it's ever been able to. So I think that is going to continue to improve.
Well, the good news is tech is a part of a whole world around sports teams and leagues. There's a lot of creative investing that's happening around those rights holders. Monetizing the IP accordingly, it's what we call ancillary assets or sports-enabled assets. Investors are looking at this and going in at record-breaking pace. Now, how important is it, Ian, Don, to have a diversified but integrated portfolio, this 360 flywheel that includes the team, but also the ecosystem around the team, the content, the media, the ticketing, the monetization of the live experience? How important is that to drive the kinds of returns you're looking for?
It's not for us. We value so much the challenge that getting approval to invest in the clubs and the leagues presents, that if we stray outside of that, first of all, our investors are not expecting us to do that. If they want sports tech, some of the best tech investors in the world invest in sports. And there's no barrier to entry there. If you are an incredible early stage tech investor and you want to invest in sport adjacency, that's amazing. There are literally 100 firms that can do that for you. If you want diversified North American sports exposure, there's one firm in the world that can do that for you, and it's Arctos. And so we stick to what we tell the investors we're going to give them. If there are operating companies that serve teams, and our teams can help those companies win, we have a place for them in our portfolio. So a company like SeatGeek, which is a next generation ticketing platform. We want our clubs to use SeatGeek. We can't make them use it, but we can help SeatGeek win business by helping them position against other ticketing platforms. And so that's where we will invest in the ecosystem, is if it's in companies that can be amplified by our franchise portfolio.
Sure.
And just to add to that, a lot of the teams, especially the bigger ones, are benefiting from that technology, right? If you think about what's happened with the relationship between the fan and the team. For years, it's been one to many, the way in which teams talk to their fans. Now, because of data and big tech coming into sports, it's becoming one to one, right? And what that means for us is more monetization. And it's not exploitive monetization, it's presenting things to fans that they want, right? I've got a 5-year-old son. If the New York Knicks can provide me with experiences that my 5-year-old son are going to enjoy, I will spend more money, right? The fact is now they know I have a 5-year-old son. 20 years ago, they would have had no idea. So if you're heavily invested in teams, you are benefiting from that tech. As Ian said, I do think there are interesting companies in the ecosystem that complement these big teams. But yes, you can go find tons of investors that are focused purely on sports tech. We don't need to dabble in that.
I'll give you an example of what Don's talking about. One of the things that I'm very excited about, again, a random piece of data, if you can get a kid to go to a sports event, a live sporting event, before they turn 14 years old, 90% of them will identify as a fan of that sport for life. It's a huge, huge lifetime customer value event if you can get a kid to go to the game. Augmented reality is going to be able to put kids in the game for a small upcharge with no lag. You'll be able to put your kid in the NBA game against LeBron James, and if you love the Lakers, your kid will sit there and watch the Laker game with you, and you can pay a little bit more and download the highlights of your kid dunking on LeBron so they can push it to TikTok. My wife won't let us watch MMA. She thinks it's too violent. But if I could load my face onto a one champion fighter for her to watch it just get pummeled for 30 minutes, she would pay to download that and share it with her friends. But that monetization is coming. And that global reach to all those kids is coming. And that's not reflected at all in any of the fundamentals or valuations you see today.
So if I could just comment on this, I'm with Ian on this. And look, obviously I'm biased because I sit on the league side. But be it teams or leagues, ultimately this is a business of IP, right? Intellectual property. And look, to become NFL and NBA and one championship at UFC, it takes years and years of investment. It takes years and years of work, to get there. But once you're there, you can monetize this IP in so many different ways. I think technology obviously will help you find new ways to monetize, right? The Web3 world, licensing, all sorts of gaming, fantasy, betting, there's so many things you can do. But in the end, it is the IP that people want to watch. It is the Lakers that people want to watch. It's our fighters that people want to watch. So I like sort of being upstream in this sort of value chain.
I mean,
it's like the Mona Lisa, right? In the end, you can go to the museum and view the Mona Lisa. I can view it on a device. I can watch a documentary on it. But there's only one Mona Lisa, and I'm looking at it because it's the IP. It's the Mona Lisa.
Sure. I mean, if I'm an investor listening into this conversation with little to no background in sports, I'm totally sold. Talking about a large and addressable market, attractive risk-adjusted returns, uncorrelated to GDP, public markets. But the reality is you do have investors on the sidelines. How can we get them in the game? What are some of the structural changes you'd like to see within sports to enhance its value proposition? And also, if you guys can touch on a few areas you expect to see the highest degree of growth in over the next few years as well. It's open to all of you. Who wants to go first?
Look, I think that any new investment category requires missionary work and education. Yep. We have been doing that missionary work for the last 5 years. We have been investing significantly in our data science and research platform. We put out tremendous data-driven content about the sports industry, the business fundamentals of sports, the valuation and historical performance of sports. We have created the only clean proprietary data set of transaction activity in North American sports, and then provided that to the University of Michigan. Their business school, they're the Ross School of Business, now publishes quarterly an index that is downloadable for any academic or financial investor to study and analyze as a benchmarking reference, which is critical to any sector that gets institutional capital. So we're doing the work that's required to educate the institutional investor community on the risks, the returns, and the opportunities in global sport. and we're honored to be in that position.
Wonderful, wonderful.
Yeah, and I'll
Don?
just add, it's just about evangelizing. Ian's been doing it for 5 years. I've been doing it as an advisor, now investor for a long period of time. And I think part of what we need to see are the results, right? And we're all cheering for Ian because he's showing great returns, right? And when investors see those great returns, they're going to say, how do I get in, right? So it's just a matter of time before the flywheel starts. We're in the early days, right? You can call it the first 5 minutes of the match, whatever you want to call it. But over time, as people see, this is a fantastic asset class.
So we're not in a bubble after all?
Huh?
We're not in a bubble after all?
Yeah, no, it's not a bubble, right? Look, when I worked at the NFL in 1994, we sold expansion franchises for $200 million. People thought it was crazy, right? $200 million. Now we're talking $5, $6, $7 billion. So I think it's just a matter of time. I do think you asked a question about what can be done differently. I do think cash flow matters, right? So I do think while it's important to reinvest, I do think some teams need to be thoughtful about their cash flow profile because some investors just look at it and say, sounds cool, but where's the cash flow, right? And we need to be able to point to that.
100%. Larry,
Yeah,
Fung, last word.
I would say health and wellness. If you go back to last season, Ian, you're the stats and analytics guy. But if they could quantify what Aaron Rodgers' Achilles injury costs their fan base and their organizations in terms of viewership and interest, I mean, it will be palpable. So I would say to be able to figure out ways that we can continue to improve the surfaces that our athletes play on, the beds they sleep in, how much sleep they're able to get. So the more information that we can get to be able to help athletes be able to play longer and at a higher level is only going to be good for the game. And also I would go put sports betting in. If you look at the growth of the WNBA and why people are watching it, obviously Caitlin Clark is one of the best players in the world, but it's also one of the highest betting betted sports that you look at United States. And if you think there's only 24 states in the United States that have been legalized to use sports gambling, and how that can change internationally and bring in so many more diverse viewers to watch sports, I think it's another one that's going to be huge in the future.
Well, Fung, last words?
Yeah, I know we talked about this already, but I really believe that technological advancements, driving new ways to interact with your favorite sports IP, that's going to be a huge thing. Sports betting, fantasy, Web3, and we're only scratching the surface, right, if you think about it.
Yeah.
Some of our Web3 projects, for instance, allow fans to actually vote on the next fight. They can become a matchmaker. They can even vote on the venue, right, for the next big fight. So these are all kind of new ways to interact, and I think we're just scratching the surface. The other thing I'd say is actually, and credit to Ian and Don, what they're doing, is, I think the democratization, right, of access to sports assets.
Yes.
So I'm talking more about the capital side. That's going to drive, that's a huge growth area as well. Don't forget who their limited partners are, right? We're talking about pension funds, we're talking about sovereigns. Because they now have access to this very attractive asset class, they can fund teachers' pensions better, they can fund government, infrastructure projects better. That's going to be I see there being a huge surge, of sovereign and limited partnered capital demand.
Lots of tailwinds, and I think what this discussion makes clear is that whether you're an investor, fan, or athlete, the sports investment landscape is evolving rapidly, and the next play could be yours. Gentlemen, thank you so much for your time. Thank you for joining us. Enjoy the rest of your afternoon.